Welcome to today's market report.
European stocks paired losses and Wall Street reversed earlier gains on Thursday as investors weighed uncertainty over central bank tapering and economic recovery due to the coronavirus Delta variant against strong weekly jobless claims data. Major US indices were lower, pulling back from early gains but still close to all-time highs. The Dow Jones fell 0.38% to 34,897. The S&P 500 lost 0.32% to 4,499. Nasdaq dropped 0.03% to 15,282. Federal Reserve Bank Governor Michelle Bowman added her voice Wednesday to the growing number of policymakers who say the weak August reports from the job market likely won't through of the central bank's plan to trim its $120 billion in monthly bond purchases later this year. Early in the day, US data showed the number of Americans filing new claims for jobless benefits fell to the lowest level in nearly 18 months last week, offering more evidence that job growth was being hindered by labor shortages rather than cooling demand for workers. After falling as much as 0.9% in morning trade, the Pan-European Stoxx 600 index ended largely unchanged, around 467.57 points. The index had shed 1.5% over the past 2 days on fears of a more hawkish than expected ECB. Eurozone bonds yields tumbled as the ECB took its first tentative step in withdrawing COVID-era stimulus. Southern Europe led a fall in Eurozone sovereign bond yields. The euro rose 0.15% against the dollar, climbing for the first time in 4 sessions, while bond markets chaired by sending French 10-year yields negative again. We're seeing some modest weakness, mainly because the market is just in flux. There are no real clarities on when we will start to see the Fed and ECB start to pull back stimulus, according to Ovenda. Instead of hinting at any potential end date for its pandemic-era purchasing program, ECB President Christine Lagarde instead channeled the spirit of former British Prime Minister Margaret Thatcher, saying the lady isn't tapering. Germany's 10-year yield, the benchmark for the bloc, fell. MSCI's benchmark for global equity markets fell 0.33% to 740. Emerging markets stocks fell 1.18%. FTSE 100 in the UK dropped 1% with low-cost airline EasyJet tumbling over 10% as it tapped shareholders for £1.2 billion. MSCI's broadest index of Asia-Pacific shares ended down 1%, which was its worst daily performance since 19th of August, the last time markets decided they were worried about the US Federal Reserve tapering its massive asset purchase program. Chinese tech giants Tencent, NetEase, and Alibaba had slumped 8.5%, 11%, and 6% respectively after online gaming chiefs were summoned by authorities to check they are sticking to strict new rules for the sector. The global story is looking soft and it's being hit by the Delta variant, plus concern about potentially the Fed still moving towards taper, according to ING. It's an unsettling combination of things. Oil prices fell on China's plan to tap state reserves and a smaller than expected drawdown in US crude supplies. Brent crude was last down 1.57% at $71.46 per barrel. US crude was last down 1.66% at $68.15 per barrel. Gold steadied in choppy trading, buoyed by a slight retreat in the dollar. Spot bullion prices were up 0.4%. The gold futures was up 0.13% at $1,795.85 per ounce. After recording losses for 3 days in a row, GBP/USD is trading at 138.41, up 0.5%. Broad US dollar weakness, upbeat market sentiment, and hawkish comments from BOE's Governor Andrew Bailey lifted the British pound value against the greenback. As previously mentioned, the market sentiment is in risk-on mood. US major equity indices are rising between 0.25% to 0.35%. The dollar index is at 92.58, losing a minimal 0.08% and posting its first losing day in a week. Eurodollar is struggling to extend gains made after the ECB speech, capped at the high of 118.41.
This is today's market news. Thanks for listening. We'll see you next time.